Are you overwhelmed by the world of crypto taxes? Trust me, you're definitely not the only one. That's why I want to arm you with the weapons you need in order to follow the rules and pay as little as necessary in taxes from your crypto profits. This topic is incredibly confusing and complex, but in this video, I'll simplify it for you in plain English. Welcome to Crypto Bookworm, your go-to channel for easy-to-grasp crypto education. My name is Jim, and I'm here to break down the complexities of the digital asset world into bite-sized animated lessons. I believe crypto is the future of finance, and I want to help you make sense of it all. So let's start with the IRS's definition of digital assets. On IRS Form 1040's instructions, it states, digital assets are any digital representations of value recorded on a cryptographically secured distributed ledger or any similar technology. This is their catch-all statement of, yeah, you have to pay taxes on crypto. As far as what constitutes taxable digital asset transactions, we've got selling digital assets for cash, trading one type of digital asset for another, using crypto as payment, mining or staking crypto, receiving airdropped tokens, getting paid in crypto, and receiving interest or yield in crypto. Don't worry, not every single thing involving crypto is taxable. I'll mention the ones that aren't in a bit. But for now, let's talk strategy. I'll start with short-term versus long-term capital gains. If you hold a cryptocurrency for 1 year or less, this is considered a short-term gain, and thus you'll be taxed at your ordinary income tax rate. But if you can hold on to it for a year or more, you get a break. The asset will then be taxed at 0, 15, or 20%, depending on your taxable income and filing status. This is a great example of getting rewarded for patience. Good things come to those who wait, as they say. Another way to offset your burden is a strategy called tax loss harvesting. This will lessen your liability and possibly cause you to see a refund. You may deduct up to $3,000 per year in capital losses. Do note that you may only deduct short-term losses against short-term gains and long-term losses against long-term gains. Use up your short-term deductions, then do your long-term ones. Anything above $3,000 will actually carry over to the next year, so go ahead and report them too. I think of this as a bit of sleight of hand. Completely honest and legit sleight of hand, of course. The first time I started entering these on the forms, I was actually even a little nervous, but I just checked all of my sources multiple times and made sure I was following everything to the letter of the law, and of course, everything worked out fine. And the next time I filed losses, it was just business as usual. Hey, just real quick, if you've found any of this helpful so far, do you think you can take like 1.5 seconds to find and click that thumbs up? Your help with the algorithm is most appreciated. It directly contributes to more content being released, as well as growing our community. Now let's change gears and talk a bit about filing and record keeping. I don't think you need me to tell you that since we're dealing with one of the scarier three-letter agencies here, accurate record keeping is absolutely vital. And when you add the complex world of crypto in with the daunting subject of taxes, this can be overwhelming. I know it was for me. I definitely had the lost at sea feeling, and anyone would feel that feeling even just looking at my desk. So I cleaned my space and did what I knew I needed to do. And it really paid off, both literally and psychologically. Also, thankfully, we've come a long way in the last few years as far as transparency on the topic. There are also some fantastic and easy-to-use tools available to help you with this, such as CoinLedger and TokenTax. CoinLedger is known for its user-friendly interface, portfolio tracking, and customer service, while TokenTax has the ability to integrate with accounting software, and you can even connect with tax professionals. When you're just going about your normal trading, you can consider your tax obligations as well. For example, if you're approaching a year of holding an asset and the charts are looking okay, maybe hold on just a little longer in order to benefit from that huge long-term capital gains tax break. There was a time that I had a bag of Matic, seemingly forever, waiting for it and the market to have an upswing. That day finally came, but something told me to check how long I had been holding it. It happened to be only 2 weeks shy of a year. Though I was eager to take my profits, I thought surely it would be okay to wait the 2 weeks for the long-term tax break. In the end, the strategy paid off, and the price did happen to go even higher. More advantages can be gained using IRAs or similar types of accounts as a sort of vehicle for your crypto transactions. Let's say you place your digital assets into a Roth IRA. You can realize any capital gains at all without being taxed, since you already paid taxes on the funds in the account. If you place your crypto in a regular IRA, you pay income taxes when you make a withdrawal. This could result in an advantage if your income, and possibly tax bracket, is reduced after you begin withdrawing from the IRA. These are some potentially rewarding loopholes that anyone can take advantage of. Now let's not forget about just regular old deductions. Everyone already knows about tax deductions for the cost of doing business, of course. Have a home office where you happen to also spend time looking at charts and trading? Maybe you even do something directly involved with crypto, like Web3? Well, they have deductions for that. How about the costs of mining? Oh, yeah, deduct those too. And don't forget about your capital losses that we talked about earlier. All of this should be done while staying 100% honest with you know who, of course. Okay, let's ease some tension and get into the non-taxable events involving crypto. These include buying digital assets with cash, for example, just buying some Bitcoin using your bank account, transferring crypto between wallets or accounts you control, and gifting crypto, unless it's a large gift that could trigger other tax obligations. Donating crypto is not only not taxable, but it's even deductible. So don't forget about that when you're filing. Doing due diligence with the IRS has always been smoothest and easiest for those who stay well ahead of the deadlines. For 2024, you can file as early as January 29th. But if you can become eligible for a long-term capital gains break later than that, go ahead and wait to pull the trigger. Just be aware of the big date. You know it, you love it, yeah. April 15th. I think we've all even known that date since we were kids, hearing our parents grumbling about it. But yeah, stay on top of these dates and use all of the tools in your box. Excel sheets, CoinLedger, TokenTax, hey, even get some professional advice if you need it. Just make sure you have your ducks in a row before sending everything over. I also can't stress enough how important it is to stay up to date on the ever-evolving changes in crypto tax law. It's changing as fast as crypto itself. The people making these laws have their jobs for a reason, so you must keep your finger on the pulse. Subscribe to reputable financial news outlets. They're writing articles on crypto daily by now. Don't forget the many crypto news platforms as well. Follow all of the sources that you possibly can on social media, and you'll stay informed. So, for a quick recap, simply being aware of taxable events with digital assets is like step 0. Then, develop an overall strategy with your holdings as far as long-term versus short-term gains. Always make sure you're honestly deducting every possible thing you can. Be aware of the important dates for filing, and stay current on the constantly changing laws. Don't be afraid to consider taking the advice of a professional, and look into tools like CoinLedger or TokenTax. If you're wondering about what altcoins look enticing in 2024, check out my previous video and join the discussion. We'd all love to know your favorite altcoins.